Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to be taking a look at the US dollar currency index and what can we expect from the US dollar this week. Now, there is massive news. We've got the FOMC rate decision this week, and it's largely anticipated that the FOMC are going to release a dovish statement. The reason being is because we've seen a slowdown in inflation. So a slowdown in inflation is not good for the Federal Reserve. That'll be looking to hike or potentially lower interest rates. Now, if the FOMC come out and be very dovish and talk about cutting interest rates, then the dollar is going to become significantly weaker, okay? And if, and only if, the market pushes back below this key area here around about the 97.30 or beyond 97.30, and on the weekly chart we close back within these highs, then I would anticipate the market to drop lower back towards 95.60. President Trump wants lower interest rates. Pretty much everybody would like lower interest rates in the US, especially property investors and things like that. It's not coming as a surprise if the Fed are going to talk about or at least be dovish in their tone. It may come as a little bit of surprise if they talk about cutting rates by a certain amount, maybe like by 0.25% or 0.5% in the near term. That would definitely be a dovish tone from the Federal Reserve. However, I'm not really expecting that. I'm expecting them to kind of stay around the same sort of level, and even, I reckon a dovish, they have to kind of comment on the inflation and that the inflation is slowing. So the likelihood of hiking interest rates moves relatively lower, but again, we've got the chance for a bit of a dollar boost towards the end of the week just because of the jobs report, the NFP data. Okay, any growth in the labor market would be seen as a positive for the US dollar. Technically, what do we have? So technically, we're just looking at this market at the minute, and we broke out of 97.70. That was a key high that we were looking for it to take out, and the market did close above, which is fantastic. The reason why this market, we were looking for a breakout of the highs, if I just go to the monthly time frame, is because you can see we were starting to form a higher low on the monthly time frame, pushing higher. This was our key monthly high. We've now got above it. End of month is pretty much tomorrow, and if we do stay above this level, end of month looks quite bullish for the US dollar, with a potential for it to move back towards the sort of $99 area, these key crucial lows in here. Okay, so just looking back into the daily time frame, what do we see in a little bit more detail? Again, we can see the market is clearly holding above this level. Dollar looks particularly bullish just technically, and if the market does become dovish with the FOMC meeting and we do push towards this 97.20, I imagine that the buyers will be looking to step back in, but anywhere below this point. And if we do see the market rally and close back within this sort of area around about the 97 or between 97.20 and 97.60s, I do feel like we will see that continued upside for the US dollar. And I'm just going to grab a fib. I'm just going to go from the swing high down to this swing low area in here, and what I can see is the fact that we've got that nice 1618 Fibonacci extension up at that 99.30 area. So this is where I think the market is going to be looking to target in the near term, or at least for the next month. Seasonality also shows that the US dollar does grow through the month of May, and we could see further upside. So if you're watching on YouTube, please like and subscribe. If you're watching on TradingView, follow us. Comment below, what do you think is going to happen to the US dollar in the near term? Thanks for watching.